We are live. Hey everyone, Retire on Dividends here. I'm with the one and only Mike Venuto from Tidal. He's the co-founder and CIO. Mike, if you don't mind, giving a brief introduction of yourself so the community knows who you are. And while Mike's talking, community, if you don't mind in the chat, just mentioning whether or not the sound works.
Okay. Great to be back. My name is Mike Venuto. I am the co-founder and CIO of Tidal Financial Group. We're a platform that helps people launch, grow, and operate ETFs. And we're currently behind about 194 ETFs. I would say 30 billion as well, but I think it's less than that after today. It's been a really rough day in the markets. I've been in the investment career for about 25 years. I worked at a hedge fund. I worked as a broker, learned everything not to do. That's what I always say about that job. And then when I was 34, I started Tidal. It was called Toroso back then. Kind of had a different plan. At the same time, I took a job as head of investments at Global X. I kind of worked at both companies for the first 3 years. Entrepreneurship's super hard, so it takes some time to grow it. Tidal's now about 12 and a half years old. So I know a lot of you heard about us recently because of YieldMax or Defiance or Nicholas or a lot of these big ones that have really garnered attention in the community. But we've been doing this a really, really long time. I've launched hundreds of ETFs for our clients, and just real proud of everything we've got going on.
All right, thank you for that. And you mentioned you worked at Global X. So were you there when they launched QYLD?
So QYLD was actually launched at another company. It was called, can't remember the name. We acquired it, but it was originally acquired by Murray, which is the bank that now owns Global X. They named it Horizons, which was the name of the ETF company they had in Canada. That's also part of Global X now. When we acquired it, it had like no assets. It was one of the first ever buy right ETFs, right? Like true buy right. The first one ever was PBP, which doesn't really aim to create income. It's more of a total return buy right because the structure of the ETF really wasn't set for this until the last couple of years. And it's hilarious to me that this QYLD, which was like a nothing burger to us back then, is now like their biggest fund. When I was there, our biggest fund was actually a dividend fund called Super Dividend because you really couldn't do the buy rights to the level that they're done today before the rules changed 3 or 4 years ago. So we had this Super Dividend fund. They still have it. I don't know how big it is now, but when I was there, we got it to $1 billion. Its yield was like 8%, and people thought it was amazing.
Yeah.
Can you imagine 8% now?
I know. Yeah. Everyone thought it was that was the scam of that age, right? It's impossible. And now, obviously they're like 8% a joke nowadays. But yeah, I wanted to get I don't know what the feeling was like when QYLD launched, of how people felt. And I wanted to ask too, because I heard you mention that in another interview. You said the rules changed 3 or 4 years ago. So what exactly changed? So QYLD, they sell at the money covered calls, right? So what, I assume obviously that was allowed, 10 years ago or whatever it is. Now, what did they exactly change that allowed a little?
Yeah, so the changes didn't massively impact QYLD, but they made it so that for the first time ever, you could do a single name covered call, right? So the rule that changed, there was 2 of them. In 2019, there was a rule called the ETF rule, which basically said anything that could be done in mutual funds could now be done in ETFs. And closed-end funds have been doing these buy rights forever. They're just, traded a premium or discount. So now that rule basically said if you could do it in a closed-end fund, you can now do it in an ETF. The second rule, which was way more important, was called the derivatives rule. And this is why J is so popular now, right? The derivatives they weren't very much used in ETFs prior to that rule. That rule was a year later, and then you kind of see all this proliferation of single stock leverage, single stock inverse, single stock with income. Now you got buffers. You've got, I was on Pisani's show a couple days ago with the guy who was doing a Bitcoin buffer product, right? Like some of Bitcoin's upside, but cap the downside. All of this comes from the ability to now use derivatives in ETFs in ways that just weren't legal 4 or 5 years ago.
Okay.
It also helps that we got 0 DTEs now too, and the options market has just exploded, right? Like,
yeah,
definitely. There's all kinds of things that can be done that just weren't possible, and only hedge funds used to do them.
Yeah. So who was the first? What was the first, like, first one to make the noise? Was it Tesla, or was anything out before that kind of did something different, or was it really
Yeah, I hate that I have to give credit to JP Morgan, but I do. Jeppy paved the way because it showed that people were interested in active options writing, right? So Jeppy, what is it, like, I don't know the exact yield, 13, 14%, something like that. But 4 years ago, that was an unheard of yield. And 4 years ago, people really didn't buy active managers, right? I give Kathy Wood a lot of credit for breaking through a lot of that. Everything still people wanted passive. The first high income ETF using options was actually, it's closed. I love this fund, but it wasn't mine. It was this guy, Kevin Rich, who's really good at like figuring stuff out. The ticker was HVPW, high vol put right. But it had to be passive because back then you couldn't do what we call in-kind creation redemption in a fund that held options. So they were terribly, terribly tax inefficient. Like, I know I get complaints from some of you, but much, much worse. In the high vol put right fund, because the old rules where you couldn't do the in-kind creation redemption, if somebody bought a bunch of it the day before the options were expiring, nobody in their right mind would sell these puts that day, but they were forced to because of the old structures. So everything we do today with YieldMax, with Nest Egg, with Nicholas, with Theta, with Defiance, with the wheel strategy, with the PUTD, we have so many of these option strategies. Almost all of it would not have worked 4 or 5 years ago, or would have been really inefficient, and people would have been able to manipulate it.
Yeah, times have changed in a good way. I'm going to go to some of the community questions. This is the first question. He's basically asking if if the Magnificent Seven changed to other companies, or maybe if they made it the Mag 8, right? I assume, that would involve a prospectus change from any, from YMAG or MAGs or any Magnificent Seven fund, right?
So that's funny because the SEC, when we filed for this one, they asked a lot of questions about that. I believe there is language in there that if that term changed, we can change the underlying constituents. I'd have to go reread it, but I do remember this discussion with the regulators and with Jay and with the other YieldMax people that are involved in the back end about what we would do to address that if it changed. I think what we said is like the 7 most popular or biggest companies. I don't think we've locked ourselves in. The beautiful thing is what you're asking, unless we were to go from like 7 to 15 or, completely change the strategy, that would probably be just what's called a sticker in our world. Very simple filing, and we'd probably be able to execute it in 30 days, maybe even 10 days. That's not what they would call like a massive filing where we'd have to do a prospectus change and all that. It's just you stick a sticker in there.
Nice and easy.
And we would definitely forecast it, and I'm sure the whole world would be forecasting it because we did think about it because there was some antitrust questions with Google or Alphabet or whatever you want to call them. Yeah, and I know there's always a love-hate relationship with Tesla.
I think last year or not that long ago, everyone kept saying, "Oh, they're going to be taken out." I'm like, but people just keep saying that.
There's got to be 2 sides to both sides.
Exactly.
Yeah.
Were you involved with Misty going to weekly options? It's now, you could trade weekly options on Misty. I know Jay said he, when I spoke to him last, is able to put file. I don't know what the word is, file for it or request it. But were you involved with that?
So we have a full capital markets team, right? It's McGrath, who used to be at Zega, and Bader, who was here. Now they're together, and then there's a team under them. There's a couple things they do, right? So one, they're always dealing with all these lead market makers, APs, all these people behind the scenes that make these things trade efficiently, right? Because sometimes there's more buyers than sellers for Misty.
Yeah.
Well, if it was a closed-end fund, that would make it go trade at a premium. It's not a closed-end fund, it's an ETF, and there has to be capital markets parties out there like Citadel, like GTS, Jane Street. We work with Goldman, we work with BTIG, like the Virtu. There's just many of these. Our capital markets team is constantly talking to them. They're also constantly talking to the exchanges. If we want options on one of our products, we just have to ask. If we ask and they look and they see there's enough volume and that people will trade it, they're going to list the options pretty quick. So once there's options on something, then we can do more with it. We did not call up the NASDAQ and beg them to put weeklies on MicroStrategy. Your community did. Every community out there did. Now, we called up and said we would use them, right? And we'd do flexes and we'd do all that. So we do have that dialogue going with the exchanges. I actually, one of our clients was on Bloomberg's show today, their ETF show. He's got the Bitcoin and gold ETF. So $1 gets you $1 of Bitcoin and $1 of gold. So it's kind of leverage without the decay. And, he just got options listed on his fund. All it took was a phone call. That's the beauty of having the scale of the Tidal platform, right? And having 100 people working to make all these ETFs work.
Yeah, I know the community is pretty happy about that. And since it just happened, like you could tell the monthlies are busy, right? The open interest on those options trades are still good. The weeklies now, it's going to take a while to, I guess, start filling it up. But hopefully in due time, doing options on Misty could be a regular thing. I don't know how it's going to work with the dividend, right? How they're going to reflect that in the strike prices. But I'm sure that's going to be a busy job for someone, right?
Yeah, it's a busy job for a team. And, it doesn't surprise me that there's weeklies now, because you also have all these leveraged MicroStrategy positions, right? So Defiance has MSTX. Greg's company, which is Rex or T-Rex or whatever he calls it, has MSTU. And, it's no secret that the traditional way leverage is done is what's called swaps. Well, most of the banks don't want to write a swap on MicroStrategy. So both us and Tuttle Greg or Tuttle Rex use options. And believe me, weeklies are way more efficient for doing leverage than monthlies, right? Because once you go into the monthlies, you got the gamma and it can blow you up. So it's not pleasant, right? So I'm really glad that they're there too. I'm sure Sailor is as well. Before we launched Misty, Jay and I met with Sailor, and we told him what we were planning to do, and I couldn't believe how quickly he understood that it's a synthetic and how it would work. And he looked at us. He goes, if you do this, it's going to yield close to 100%. We're like, we know. So, and then I saw that he actually mentioned it on one of his board meetings. He's like, you want income off me? Go do this. I was like, wow.
Yeah. Smart guy. I know the only reason I'm going to bring this up is I know when we talked in New York, you mentioned you did want to meet and maybe say something to the community who talk about NAV erosion.
Yeah.
You may have an opinion on that, right? Did you want to state anything for those of everyone out there who says these funds have NAV erosion? Like, what's your response to that?
I'm going to say it very strongly. NAV erosion is not a thing. What's happening is the stock goes down. And if the idea of selling a call to generate income, what you're selling is the implied volatility, right? If the actual volatility is bigger than the implied volatility, you're going to go down more than you collecting income. That's what you guys like to call NAV erosion. That's just a factor of the stock went down, right? So like I hear about NAV erosion in Tesla for months, and then there's an election and Tesla goes up 70%. No, the NAV erosion stopped. We did something different. We didn't do anything different. We are selling the implied volatility. People are betting that the stock is going to move this much, right? It's going to move 40% in the next month, and we're selling that. That's the call option. We're distributing that. If the stock moves 50% in the next month, you're going to lose the $10 difference between the two. That's it. Like that's not NAV erosion. So that's also why we created Crash, right?
Yep.
If when you buy a YieldMax single stock position, you need to have an opinion on which way the underlying is going. If you don't, and you just buy and hold it forever and drip it, and it's an okay company, you'll do okay. If it's not an okay company, like I see in the chat, people not loving MR and Y. I understand. It's not done very well. That's not because anything I did or Scott did or Jay did or Mullen did. It's because of the underlying position. So that's my take on it. You're selling vol. If you get more vol than you expected, you're going to have the position go down.
That speaking of MRNY kind of leads to this question. I'm not sure if you're able to answer it, but are there any plans to amend YieldMax? I think I asked Jay this last time too, to remove any, we'll say, bad performers or repeat offenders, or they maybe going to launch a fund that just launches or maybe just has the better performers. I know they kind of have FEET and 5E, which kind of do a smaller version of that, but any chance of YieldMax getting rid of the crap, basically?
I appreciate it,
and
I'm gonna tell a story about this one to get to the kind of the punchline. Actually, I'll start with the punchline. As of right now, I've not heard any chatter from Jay or the other YieldMax folks that they would want to change it. That doesn't mean that it doesn't change. I think it's more likely that we would launch other products, different subsectors, or putting together the portfolios or things like that. So for all the haters of stocks, right? So we did SMCY, right?
Yeah.
It basically came out.
You launched it at a great time, right?
Oh my goodness. Like it got destroyed, right? And the day that it was supposed to go into YieldMax was the day that it also was possible it was going to get delisted. So I made sure that there was like language in the prospectus that if they announced a delisting, we would not have to buy it in YieldMax. So the day it went into YieldMax, the very next day there was like good news on it, and it went up like 25%. The underlying went up 25, and SMCY went up like 12 or whatever. But like,
so was that wording in there at the time?
There's wording in there that allows us to not buy something if there's a threat, an existential threat to its listing status or something like that.
Okay.
But we try very hard not to be active there. Now, I don't know how many of you, I know you, Mark, go through every trade we do, but with YieldMax, we do something different than that people don't notice a lot of times, which is this active tax loss harvesting. So YieldMax does not always own all the YieldMax ETFs.
Yeah.
If one is down 25% or more, we will choose to recreate the position.
Yeah.
Using different strikes.
I saw that on Murney, actually.
Yeah, we did it on Murney. Yeah. We did it on YBIT this summer, right before it took off. So like, there's been a couple of times where we've tried to do, got real close to doing it with other ones, but haven't, because it's a very complex thing to do. But it's
so YieldMax is more active than we even thought. That being said,
yeah. YMAG has the same ability, but nothing's ever been down 25%. Although Nvidia almost did it today, so we'll see.
Exactly. Here's a question, I guess. Where do you see the future? Obviously, there's a lot of options ETFs out there. More and more keep coming out. what do you think is going to happen in the future? Just you think it's just going to keep growing because of the popularity that others have had, or then the strong survive?
I mean, so I don't think we've really scratched the surface of what can be done yet, right? So
Yeah.
Options are generally used to enhance returns, like a form of leverage, right? To protect returns, which you've seen, before there was the covered call boom, there was a buffer boom, right? There was Bruce Bond, an innovator, came out with the buffer stuff, protecting downside protection, and that world of options ETFs is about 2.5 times the size of options income ETFs. And that world is not really done by the FIRE do-it-yourself like community. That's all the old brokers, right? So I think your world is much bigger. I think the options income, which is that third one, is going to be huge. Then you have combinations. We haven't seen a lot of combinations yet, but Granite Shares just did 2x Tesla with a yield. It's got its ups and downs for sure. You haven't seen a lot of like protected, right? Like downside protected group of stocks, but with a yield. I think those.
Like
so I think you're going to take. Yeah, well, Ulti needs a little more upside.
Yeah.
I think we're going to see a lot more of these combinations, though. Leverage plus a yield, or yield plus protection, or leverage with protection, right?
Yeah.
Like there's, if you open your CFA book, there's 30 or 40 option strategies. Almost every one of those is going to be done on the S&P, and then on the Qs, and then on the Russell, and then on whatever hot stock. Now, I'm not saying I'm going to do them all, but I'm going to have clients that come to us and say, is this one viable? Is that one viable? And we're going to work through it and see if they are.
Yeah. And I don't even think I don't really watch much TV, honestly, but like CNBC, for example, have you ever even heard them mention the word YieldMax? Like, I know Sylvie was on there, but outside of that, I haven't really heard it on mainstream yet.
They don't talk about it that much. They did talk a lot about JEPI, though. I'm sure JP Morgan buys some commercials, right?
Oh yeah, well,
yeah.
Sure, they own some part of that.
Wall Street, there's a lot of follow the money in Wall Street.
Yeah.
It's funny. Like one of our it's out there in the public sphere now. Defiance is doing something called battle shares with us. And definitely the CNBC and Bloomberg crowd all wanted to hear about that. But that should be coming out in a week or two. That's where you're long one stock and short another. So the first one that's coming out is long Tesla, short Ford. So I'm surprised that they cared more about that than they did YieldMax. I don't think they'll be able to avoid what is happening with this tidal wave of people wanting financial freedom from their dividends.
Yeah. Or a $2 billion fund standalone in Misty, right?
Yeah.
So it's
Well, that was before this morning.
Well, yeah. It was like for a day, but still, it hit it.
Yeah.
So I haven't heard this question yet. I know there's only two, right? LFGY and GPTY. There's probably going to be more sector ETFs.
We filed for 5 of them. So we've launched LFGY, GPTY. One is crypto industry names, including Bitcoin and MicroStrategy and all that. The other, of course, is AI. Couldn't have launched that at a better time, right? AI stocks with a yield. We also filed for, and fits right in, a China one, a real estate one, and I can't remember what was the last one. China real estate. They're all in the same prospectus, but I can't remember which. The last one was a portfolio or not. It might be pharma. I think it was pharma.
Oh yeah.
Now I think so.
Real estate though, that's not going to be high yield, right? I can't think of any REIT that is really that volatile.
They really aren't. That's why you haven't seen anything from us in that space. But if you go, if Jay's team can have 20, 30 positions, they can go into some smaller ones and maybe we can go and find some yield. But no, it's also hard because if you have a high yielding security, and most REITs are, the option isn't as big. That's why you've seen problems with YBIT, because the BITO does a dividend.
Yeah.
Right now we're able to fix that now that we're able to write against IBIT.
Yeah. Yeah, that seems to be doing better with IBIT as well. But I guess to the question though, when all those funds are launched, are they going to have a fund of funds for those 5 funds?
Well, I am writing that down, and I will suggest it to the group and see what they say. Tidal doesn't make these decisions, right? It's YieldMax is a group of people who have been doing this a long time, and they use the Tidal platform to execute. Right, we're in the headache business. We take care of all these things. Now I'm in the meetings and I make suggestions to them, and a lot of times, we do listen to the community. I am in the groups and listen and see what you guys are talking about, and look for ideas, and so I have not heard anyone talk about a fund of funds of those. It is doable, because those are not fund of funds.
Well, to be fair, there's only 2, so you just buy 2 of them, right?
Yeah.
So, but yeah, when you have 5, or if you launch more, obviously, and the thing is, they pay weekly, so obviously, people love fund of funds.
It's funny. The weekly thing does baffle me a little bit.
It's become a thing.
Well, you know what? So SoFi is a client of ours, and we do have an income ETF with them. It's Jay's high probability option strategy called Data.
Mm-hmm.
We did the first ever weekly ETF with them, and it was like 4 years ago, and it got no assets, and nobody cared that it was weekly.
Yeah, TGIF and weekly.
Yeah, TGIF. I thought, what a great ticker, and
it was awesome. But
right?
The yield was weak, though, right?
Well, that's because back then you couldn't do options income strategies, right? Yeah. So it was just a traditional bond fund that paid weekly. And then the other one was a dividend portfolio that paid weekly. So when everybody started moving towards weekly, I was like, wait, I tried weekly before, nobody cared. And now I guess it's weekly plus really high income.
Well, yeah, that's the thing. Once they saw the high income, I think they accepted it broken into weekly. Because if you just do weekly right away and you're yielding 10%, that payment probably looks like, they're like, that ain't worth it. But maybe it's because they did it the reverse, the high yield into the weekly. I don't know. But anyway, this is a question kind of setting you up to plug one of your funds here, right?
Yeah, so we do have a client that has a wheel strategy. It's actually really awesome. It's the ticker is WEEL, and it's exactly what you think it is, right? I can't get into the details, right? We can point you to the website, but if you look up WEEL, you'll find all the disclosures, and you can reach out to the managers. We do support this fund on the Tidal platform as well.
Okay. Yeah, so it's Peerless ETFs, right? WEEL.
Yep, Peerless.
Okay.
They really, really went deep in how to structure it.
A lot, like I'm seeing these Murney comments as you mentioned. But what happened to AIYY? I guess it tanked today.
Yeah, I mean,
all right, let me skim through and get some questions. Here's a question. Any chance we can get a VIX weekly, VIXY?
Oh, yeah. We have looked at it. So there's SFOL out there from Simplify. And then the guys who at Volatility Shares came out with ZIVB, and then they kind of turned it into an income player. So we haven't done something yet. I know Jay has done some back testing of it and things like that, but nothing's been filed, and I haven't heard any chatter of it being a something that's likely to come in the near future.
Yeah. Okay. Here's a good question. What are some of your what's your top 3 largest ETFs that Tidal has? Do you know offhand, or?
I mean, it changes from day to day. We definitely have some crypto exposure at this point, right? So there is MSTX and MSTY on our platform. I personally am the manager of Block, BLOK. That was the first ever ETF we did as Tidal. So that's how I know Sailor, and I'm very into all these stocks. That it was 950 this morning. It's probably 850 today. Some of the ones that like have been big, we had a risk parity fund that's still there, but there's some guys that left Bridgewater, started their own ETF. That was a huge one at some point. SoFi, their SoFi 500 is pretty big. Those are some of the big names on there. Obviously, the Defiant stuff is big. Oh, we're also behind. We do all the back office for all the Cambria's funds. So Meb Faber, one of the best podcasts you'll ever see. He's got SYLD. That's over $1 billion. Yeah, we like to look at it as a group, right? So there's 190 ETFs. On average, any ETF that's been on our platform for more than 3 years is over 150, 200 million. Most ETFs break even around $30 to $50 million. That's when you really know, they can be around until everything goes right. Because the best thing an asset manager can do to succeed is survive, right? Like, because eventually you either got a bad idea and it's going to go away, or you got a good idea and the market's going to come to you.
What determines if it goes away? I know you said 30 million break even. What is the number that they have to kind of stay above for a certain amount of time, or is that up to them?
It's up to them. So this is really good for the community to know. So the way this works is if somebody wants to launch an ETF, they come to us with the idea. We work with them to try and make sure that idea is going to work and that it's legal and we can get it through the regulators. The economic arrangement is basically they pay for everything, right? Yeah. And if it succeeds, they get all the profit. So it's not cheap to run an ETF. Most ETFs cost between $200,000 and $300,000 a year in fees, right? That's not what you guys pay. That's what the YieldMax sponsor or the Defiance sponsor or the Nest Yield sponsor or the Nicholas, they pay that for every ETF, right? And that comes out of their pocket until they're making more off the ETF than they are having to pay. So what usually determines closing an ETF is the person behind it has had enough of paying for it and the assets haven't come to it. That's usually it. It's usually an economic decision. Now, there's still a board. Tidal has multiple boards of our trust and all that. And you have to go to the board and explain to the board, I don't want to pay for this anymore. Therefore, I don't think it's in the best interest for this to exist. And the board doesn't care if it's in your best interest. They care if it's in the shareholder's best interest.
Yeah.
So the board could actually look at a client and say, well, go find somebody else to back this thing because there's X amount of shareholders. We don't think you should close it. This is a good investment. It's outperformed. So like this stuff is governed by laws that were written in 1933 and 1940. It doesn't think about all the things that we live in today. So that's what usually determines closing an ETF. Most ETFs that close before year 3. Most ETFs that make it past 3 years stay open forever. Right now, for every 3 ETFs that are launching in the US, 1 is closing. That's over the last 12 months.
Yeah, I know the Defiance had the one. It was the.
I wish he would have gave it more time. I thought that one was. I really and like Jay and I were talking about like a week after they closed, the performance would have taken off because the treasury yield went up.
What was the ticker?
I thought Trez, TRES.
That's right, Trez. Yeah, I've drawn a blank. So for those of a lot of people worry, like what happens if it goes to zero or closes. So if an ETF closes, can you just briefly kind of explain the process and how people kind of get reimbursed?
Yeah. So when an ETF closes, it's usually got to give you at least a 15-day notification. It's usually longer than that. And usually what happens is 5 days before it actually closes, it goes to cash and can no longer take in money. When the ETF closes, it's liquidated. The positions, the cash value is usually set for those 5 days. You know what you're going to get. So if the NAV is 50, you're going to get 50. There's no question about it. There's no commission. There's no nothing. Nothing has ever gone wrong in this scenario that I can think of. There were a couple times where I've seen an ETF announce a closure and it starts to trade at a discount, where I've actually gone in and bought it personally, right? Because I know I'm going to get NAV. So if it's trading at a discount, like, it doesn't happen very often. But there's, when an ETF closes, you're going to get NAV. The negative, because we want to be truthful about everything and get it all out there. The only real negative when an ETF closes to you is you could end up with a taxable event, right? So if you bought the ETF for 40 and it's at 50 and you've held it for 9 months and you plan to hold it for a full year to get long-term capital gains, and they close that ETF on you, yeah, that's where it's bad. You're going to get short-term capital gains. It's better than a loss, and it's, but you know, that is the negative that I can think of.
So on Tress, it was it was Defiant's decision to close it.
Absolutely. It's always, the only time it's not a client's decision is if a manager has done something bad.
Okay.
That our board would have to fire them.
Yeah.
That has never happened to us.
Mm-hmm.
In the history of the company. We have had some clients leave. You know, I don't want to get into the negatives, but you know, 99.9% of the time when a fund has closed, it's been the client's decision.
Okay. I know you mentioned this filing earlier. You did say there's a China, I don't know, LFGY for China, right? What was the ticker? Or did you want to?
The ticker's not announced yet.
Oh, okay. Yeah, but that is coming.
That is
soon.
Maybe. You know.
Yeah. Maybe.
The choice to launch and the choice to close is 99.9% the client, not mine. I have no one's talked to me about an international ETF yet, but if somebody wants to do it, I think that makes a lot of sense.
I know YieldMax has K Webby in the filing.
Yeah, we never did it because Brendan and the CraneShares folks saw our filing and went and did their own with Clip. So we're like, okay. And it's funny, in the original YieldMax filing, there was also a TLT, and BlackRock saw it and they launched their version of it.
Hasn't Clip been around a long time though?
Clip came out after we filed for Tesla. Tesla was the first big one.
Oh wow, interesting. Yeah. All right. Here's that they want their cake and eat it too here. So they want share upside and they want high distributions. All right. So any funds that meet that qualification?
Yeah, I mean, every fund where the underlying stock is just going up and it has more volatility implied than below. So maybe the LFGY stuff will do that, but like this goes back to what I was saying earlier. I can't control the direction of the underlying. Jay can't control the direction of the underlying. It seems like Roaring Kitty and Donald Trump are the only ones who can control the direction of the underlying stocks, right? So like, it's just,
and Elon, right?
I guess Elon from time to time. You know, if the stocks go up, you get both of these. If they don't go up, you may get one of these. You'll the only one that I can keep giving is the income, as long as the volatility's there. And when something's going down, you're usually getting volatility.
So we kind of talked about this earlier. So if we as a community want to design an ETF, say R.o.D, retire on dividends yield, what would the steps be we have to take? Yeah,
so there's a nice little blue button on Tidal's website that says build an ETF. You fill in a few questions and then somebody calls you and we start walking through it. What does that walking through it look like? Well, the first call is with somebody in business development. That's Brittany, who runs that for us. And she's really trying to gauge, is this viable? Is this, do you have enough capital to support this? Do you understand compliance rules, all the things that can get, us in trouble? We don't want to get in trouble, right? If that goes well, then you move from business development to product development. So we don't just take your idea and turn it into an ETF. We run it through the ringer. We look at all the competitors. We figure out who else is doing something similar. How is it going to work? Is the SEC going to have a problem with this or that, or naming rule? So there's 4 people in product development that are going to get the thing right. From there, you go to legal. Legal is where you write a prospectus, right? We do a bunch of work there. And then once legal's done with it, it goes to the SEC. Once the SEC has it, they have 75 days to respond and tell you, yes, you can launch, or no, you can't launch. Usually there's communication in between there. But no matter what, you're going to wait 75 days. That's it. And during those 75 days, we're helping you build a website, a marketing plan, all the things you need to do. We're teaching you about compliance. We're getting everybody, all the ducks in a row. After those 75 days, we can launch, or it can sit on the shelf a little while, and you can go out there and talk to people about it a little bit more. During those 75 days, you can't really say anything about the ETF. Basically, that's why you see Jay or myself or Sylvia, or it's very hard for us to say very much during what's called a quiet period. Basically, we're allowed to reread the prospectus to you. They're like, well, there's the prospectus is 150 pages. What else would you want to say? Yeah, okay.
Yeah. But those prospectus, the ones that are filed, that's available to the public, right?
Yes.
Through a certain website or whatever. Because
it's all on the SEC's website.
The outline draft out there, which obviously it's not final. You could, it's like, but it's but so that has to be filed on that website, right?
And during the 75 days, you're just preparing and waiting for the SEC to respond to you.
Yeah. Okay.
Then the fun part begins. Then you got to go on all these shows and no, you got to really have a plan to get the word out.
Actually, that's a good question, because how do these people advertise, right? Like, how, outside of YouTube, obviously, they can't afford commercials, right? How do they get the word?
I mean, TV commercials a waste of money.
Nowadays,
more people are watching your show than CNBC. That's especially people.
That's a stretch, but yeah.
No, I'm saying I don't think I have Bloomberg on in my office, right? But I've almost never turned the sound on. I'm not really paying attention. I'm just looking in case. It's more like a headline thing for me.
It's more to just keep it on, watch a ticker.
When people come on your show, on Adrian's show, on David's show, Corey's show, they're here because they want to actually learn something. This is why I told you how much I love the whole FIRE community concept, right? That's where we did the FIRE ETFs too, right? This is the place where people are now getting education. Now, most people don't have products that go here, right? They have institutional products. I always say, whenever somebody starts a meeting with, you got to see my Sharpe ratio, I just want to walk out of the meeting. It's nobody has ever bought an ETF based on the Sharpe ratio.
Exactly.
Right? I don't your Sharpe ratio. You're never going to get to that. People buy an ETF.
Yeah, people like hearing just regular discussion, normal talk, and you're right. I mean, YouTube is still YouTube. TikTok, that I guess it's back, and Instagram, Facebook, Reddit, right? Reddit, the YieldMax Reddit group, man, that thing is growing faster than my channel. The thing is blowing up. But things like that are they're massive. And this is I'm glad this came up, because I'm curious on this. So, are you frozen? Yeah, you're frozen. All right. Mike is frozen. Hopefully he returns. All right. While he comes back, guys, I'll leave this question up, but any questions from you guys? Keep them coming, by the way. I'll get to the There he is.
My computer
Oh, it's all right. Yeah, it was funny because I was talking. I'm like, he's frozen. But
yeah, I guess DeepSeek got to me.
yeah.
So now I'm on the iPad, so we'll do the best we can.
Okay. So can you see the comments still?
I see. Yeah, let me see. Chat.
Yes. So this is a question I was curious on because Harvest Canadian, they lost like Canadian ETFs. They launched their own version of Misty and Coney, and they call it They use the ticker Misty and Coney. That's allowed.
So once you go cross border, I wouldn't call this like playing nice, but it's totally legal.
Okay.
There is we run block here in the US. There is a block in Europe that has nothing to do with us. There is a YieldMax in Australia that does nothing like YieldMax does. It's actually run by a friend of mine who didn't know we were using the ticker. It's Alex Vineker. But it's like a traditional dividend portfolio in Australia, completely different than us. The Canadians were kind of ahead of the US on coming up with buy right strategies. There was always something, Canadian investors were always a little bit more interested in income than US investors. So I'm not surprised that they did it. Good for them. I wish I could get some royalties, but I can't.
What was your reaction or Jay's initial reaction?
Let's see what else they do.
Yeah.
Let's see if they have any ideas that we might want to do.
Yeah. Did you say bring it on or? Yeah.
Like there's so much competition in this, and I do see the affinity and loyalty that people show to the brand. I know we try and be aware of that. What I don't like is just fully ripping off something. It's not fun, right? Like because this stuff is actually hard to do. So if you're going to rip us off, at least go get the real PMs and do it the right way.
Yeah, exactly. So you need to own more Misty to afford a better internet.
It wasn't the internet. It was our cybersecurity is protecting our network. It was a restart that it did give me a warning, and I thought I hit don't restart, but I guess it didn't listen.
Yeah. Oh, I'm glad you're back though. All right. So let's see if there's any more questions for you. You probably can't answer this, but I'll pull it up anyway. Can they adjust their strategy from credit call spreads to selling calls and selling puts instead? On I guess this is on the YieldMax funds, but you can't really speak to that anyway, right?
Yeah, I mean, Jay is kind of the prospectus has a lot of wiggle room now, right? We added the call spreads so that we could catch some more of the upside, especially when you have a lot of swings in a stock. Remember, we're selling implied volatility, right? And you want it to be less. You want that number to be bigger than the actual volatility.
Yeah.
Well, when you lack trend, right, then you get some of that decay because you're capturing more of the downside than the upside. So we want to capture some of that upside with the call spreads. But this is definitely one that you'd want to get more deep into with Jay. It's out of my my skill range. My first ETF trade ever was actually in 2008. I started buying the TIP fund, which was Treasury Inflation Protection Notes, at our hedge fund and selling calls off of it because it was like a place to hide during a terrible, terrible year. So that's pretty straightforward and simple. Like, I think maybe it's important to realize, like, the reason we do these complex structures is you can't just be 80% in Tesla and the rest of the portfolio sell calls, right? That the structure of the ETF wrapper doesn't let you do that. That's not legal under the current regulations. That's why you need the synthetics, why you need the spreads and all those sorts of things. You can do that with ARK, right? I can buy ARK and sell a call.
Yeah.
But then you're paying fees twice, right? Because then you got the fees of ARK and the fees of doing all the work around it.
Yeah. Exactly. So is that so because I did see a question. I'm not going to pull it up, but about owning the underlying versus the synthetic. So that would be a reason to not own the underlying, right?
Yes.
To
Also,
avoid
in the
those.
current interest rate environment, we get a bump from the cash that gets distributed to you, right?
Yeah,
So like,
exactly.
right. So if I own the underlying, I got no yield on the underlying, but on the cash, I'm getting 4 to 5%, depending on the month, which gets added to that overall yield for the fund.
How often do you get paid the interest on those treasuries?
I mean, it accumulates daily. They're normal treasuries. We manage
Yeah.
a treasury portfolio.
Does it pay out? What does it pay out? When does it pay out though? How frequently?
It's different bonds, so they're
Yeah.
all laddered, and
Okay.
it's all short term, but it's mostly monthly income.
Okay.
There's no weekly paid treasury yet.
Yeah, there was an ask for that. I'm sure you saw
Yeah.
it. So I think this question came up twice. Do you guys utilize any AI in your execution of any trades, or I guess in general for your company? Do you utilize any AI?
So we do have a GBT license, and most of the employees use it. I'll tell you where it's been the most powerful is in legal. Like we have trained our license for GBT, right? It's when you get a corporate license, it's walled off. So anything we talk to ChatGPT about doesn't go into the database for others to do. It doesn't learn from our data to be into the public sphere. So, in legal, we've trained it to basically review prospectuses. In product dev, you can say to it, like we did a thing internally the other day. We said, build us an ETF for sports, and it does it. And then you say, build us a marketing plan, it does it. Like,
Yeah.
it's never perfect, but
Yeah.
it's there. We do have some clients that use AI. So Equibot, they have the first ever ETF that was using AI to manage a portfolio, and it's AIEQ. We just did a fund with, it's funny, the Tesla link. John McNeil was the original president of Tesla. He now runs a venture company, and we just did 2 funds with him. One that's like an EV infrastructure, and the other that's an AI infrastructure. We also, this is so funny. I think you guys are going to get a quick kick out of this. We are behind chat with Roundhill. We're partnered with Roundhill on chat, which is an ETF focused on generative AI. Yeah. So we're everybody's friend. So yeah.
Don't discriminate. Yeah.
We have not used it in trade execution. I think as of right now, I would have trouble getting that through compliance. Although, things are changing rapidly. If you went to, there's this thing called the ICI conference. It's the investment company conference. It's not a fun conference. It's all lawyers, right? And they go there to talk about the rules of the industry. And our lawyer, our general counsel, who does all this legal work, and his team, he went last year and he came back, and I was like, I want to use more AI in marketing and this and that. He goes, no AI. The SEC doesn't know what to do with AI. Stay away from AI, right? And so, and it's funny, now he's like the biggest user of it here. So it's in financial services right now, it's AI assisted. If you let an AI actually finish anything, you run the risk of getting in trouble with the regulators.
Yeah, exactly. Someone said, is there a fund that's too big to handle?
Too big to handle?
I don't know.
I mean, I don't think we would launch one that we knew could get to a point where it couldn't be managed anymore.
Yeah.
Right. So this is called capacity constraint, right? So sometimes people will come to us and say, I want to buy a fund or create a fund that only owns microcap stocks. And we'll say, okay, well, how big could it get to where we couldn't buy any more microcap stocks?
Yeah.
There are funds that have closed because of this reason. Not on my platform, but when I was at Global X, we had a frontier market fund. Frontier markets, like Kuwait, and like Kuwait's always the biggest one. I don't know why, but it got to a point where you couldn't do it. BlackRock's closing their frontier market one. We closed a Nigeria one at Global X. They closed that one after I left. So capacity is a reason for it to get too big. I'm not going to lie, the MicroStrategy leverage, it's not too big to handle, but it's a lot to handle because you're trying to maintain a 2x delta using options, and options aren't a pure delta play. So it's an enormous amount of work to make these work, but that's what we're here for.
Yeah, and there's the worry of, there being someone on the other side for all these trades, right? You're selling all these covered calls. It's blowing up the options chain. Is there going to be enough interest, right? I think Jay mentioned, like, for example, on Misty, usually they try to break up their trades versus doing everything on a Friday afternoon, right? You can't always necessarily get everything in because there's just so much volume now, right? It's almost, like we said, almost 2 billion, maybe 1.8 now, whatever, but still it's a huge volume. This guy asked this twice, so I'll pull it up. He wants me to work for you, so he said, tell him I asked the question.
Don't forget my question about getting a job. We've never discussed this, so we do some of the. I don't know how much people know about what you do for a living, so I don't want to say anything that gets you in trouble.
Exactly. Come inside. Sorry, my son's outside in the dark, but never behaves. Anyway, I want to leave some time for you, the last 5 minutes, to give you a chance to ask the community any questions, and obviously I'll pull up and you'll see the answers. So is there anything that you would like to ask the community or get an opinion on something, or just anything at all?
So I do like earlier when the question was about the instead of the synthetics and the call spreads, just doing pure wheel ETFs for different areas. I think that's something that we could create. Like I haven't stopped thinking about that since I saw that comment. So if you got a group that really wants that, reach out to us.
Just doing the wheel, you said?
They're doing a wheel on individual stocks. Nobody's done that. Yeah. They've done it on like broad-based indexes or selective stocks, but one of the things I asked Rod to let me talk about today is Tidal has done something for the first time where we have 2 ETFs that don't have a client. Our client is actually all of our clients. So we launched 2 ETFs for the FIRE community. One is FIRS, which is FIRE savings, and the other is FIRI, which is FIRE income. It doesn't hit the income numbers you guys love, although currently it says 27% on the website, but that's just because we had to pay everything out and we launched in late November. It's going to be more like a 4 to 8%. I launched these. We're not charging a fee for them. The only fees are the underlying ETFs. So the income one is built using Defiant stuff and YieldMax stuff and SoFi stuff and stuff from our client Madison. So it's a way of us building a portfolio tailored to the ideas of the FIRE community, to introduce all of the ETFs in the Tidal platform to them. So it's like our models. And, these are not the juice. These are the safety money. Like, these were bolt down very, very little today. That's their purpose. They're not a replacement for VTI. They're not a replacement for YieldMax. They are the ultra diversified, slow moving turtles that are for, that money you don't want to miss. Which I think that FIRE community, nobody's built products for them for that, right? It's always, SHDV or whatever, HD, and sit there forever, VTI and chill. No, I want something for days like today. And
so it's for people like who were planning on living on the 4% rule per se, like taking capital. Instead of doing that, you could buy
taking the yield
FIRE funds and you're getting 4 to 8%, and your capital is essentially flat or maybe
be pretty solid. I really diversify it. I've got gold exposure in there, oil exposure, Bitcoin exposure, SPAC arbitrage. I've got a tail risk fund. Cambria's got this great tail risk options fund, right? So just buys short-term bonds or 10-year bonds, and then it buys way out of the money puts. So on a normal year, it does nothing, but then you get a day like today and it goes straight up, right? So we try and have all those kind of components in there. I've got that Bitcoin and gold stacker. I've got Oh, I've got Riser. That's another one of my favorite ones. Riser's negative duration bond fund.
Yeah.
So when interest rates go up, bond funds go down. This is the opposite, right? This has a 6 to 8% yield. And when interest rates go up, this goes up.
Yeah.
So it's like this nice hedge. I like all the hedges. I used to be in the hedge fund world. That's where I came from, right?
Yeah. I saw Jay's buying hedge funds. I didn't realize that was there. But all right. I'm gonna leave this last question. I'll pull it up for you, and then we'll end it after that. So who do you got? Eagles or Chiefs?
Oh, super. So my son is so into football, and like yesterday he was like so disappointed in both games because he likes to root for the underdog.
Yeah.
Who do I got? I think I'm gonna go with the Eagles. I mean, I just think Saquon is just amazing. And he used to be a Giant, at least. You know, Jay's a big Giant guy. He's still.
Yeah. I was just gonna say Jay's gonna be mad at you. I'm a Giants fan too. So
yeah. Well, I mean, at least it's something. I like the Chiefs. I feel like the Chiefs have gotten it enough.
I know, and everyone said they cheated, and yeah, I don't. I honestly would rather I was hoping the Bills would win, and they beat the Eagles.
I wanted the Bills in, yeah. I really wanted Detroit. Like our trading desk was started in Detroit, and like the city really deserves it. But you know, is what it is.
Okay, you heard it first here. Mike picked the Eagles. I don't know what the spread is, but all right, we'll end it there.
Well, what you really need to know is who the refs are.
Yeah, I know. Well, they're always for the Chiefs lately, but I guess I'm good with that in this game. But we hit the hour mark, so I just want to be careful with time. I just want to again, Mike, I appreciate your time today. Great interview. Hopefully, you can come back in the future. We could have a lot more fun interviews, and again, I appreciate the time in New York. It was a pleasure meeting you then. Hopefully, we can have a meet up again soon. And again, thanks for your time today. And I'm sure the community thanks you as well.
Thank you.
All right. Take care, everyone.